while my ex-boyfriend Tyler ridicules my crypto trading as a, quote, basement hobby and flaunts his new promotion at Goldman Sachs, I'm quietly orchestrating the biggest financial revelation of his arrogant career. He has no idea that the woman he dismissed as a delusional day trader just crossed the $300 million mark, and his condescending girlfriend Emma is about to witness the most expensive mistake of his privileged existence. Before we jump back in, tell us where you're tuning in from, and if this story touches you, make sure you're subscribed, because tomorrow I've saved something extra special for you. My fingers dance across 3 separate keyboards in my converted basement office, each screen displaying different cryptocurrency exchanges, DeFi protocols, and algorithmic trading bots. The irony isn't lost on me that Tyler used to call this space my nerd cave whenever he'd reluctantly venture downstairs. Now this same basement houses a sophisticated trading operation that generates more in a single day than his annual Wall Street salary. The notification sound from my phone cuts through the ambient hum of multiple computer fans. Another Instagram story from Tyler, this time showing off his corner office view from the 42nd floor of One Manhattan Plaza. The timestamp shows it was posted 20 minutes ago, tagged with climbing the ladder and, quote, success mindset. In the reflection of his floor-to-ceiling windows, I can see Emma adjusting her makeup, preparing for what looks like another expensive lunch date funded by his 6-figure income. I screenshot the story, adding it to the folder I've been meticulously maintaining for the past 8 months. Every condescending comment, every dismissive joke about my internet money, every time he introduced me to his colleagues as his girlfriend who plays with computers. The folder now contains over 200 separate instances of his mockery, each one timestamped and cross-referenced with my trading profits from those exact dates. My main trading screen flashes green as another automated position closes, netting $847,000 in profit from a carefully timed arbitrage opportunity across 4 different exchanges. The algorithm I coded 6 months ago has been running flawlessly, executing trades based on market inefficiencies that most traditional traders can't even comprehend. While Tyler studies quarterly earnings reports and economic indicators from the Stone Age, I'm capturing value from millisecond price discrepancies across decentralized networks. The encrypted messaging app on my secondary phone buzzes with a message from Chen, my former MIT classmate, who now runs a blockchain investment fund in Singapore. Maya, the Ethereum merge play we discussed is printing money. Your prediction about post-merge validator economics was spot on. We're up 340% on the position. I smile, remembering how Tyler used to laugh when I'd spend entire weekends reading Ethereum improvement proposals and analyzing consensus mechanism changes. Those same weekends of basement dwelling have generated more alpha than his entire team at Goldman will produce this quarter. Through my basement window, I can see Tyler's Tesla Model S pulling into the driveway of the house we used to share. He's kept the spare key, still stopping by occasionally to pick up mail or grab something he forgot during our breakup 6 months ago. What he doesn't know is that I've upgraded the security system since then, and every visit is automatically recorded in 4K resolution. Today's footage will be particularly interesting to review, considering what I know about his current financial situation. My phone lights up with Tyler's contact photo, a selfie we took during our last vacation to Martha's Vineyard. The same vacation where he spent the entire time explaining to other guests how cryptocurrency was a bubble that would collapse any day, while I quietly executed trades from my laptop that paid for our entire trip twice over. Hey Maya, his voice carries that familiar condescending tone I've grown to associate with his Wall Street persona. I'm outside, need to grab my Columbia alumni directory from your office. It's in the basement, I reply, watching him through my security feed as he grimaces at the mention of my trading setup. Same place it's always been. I hear his designer shoes clicking against my hardwood stairs, each step a reminder of the expensive lifestyle he maintains on borrowed time. What Tyler doesn't know is that I've been monitoring his financial activities through publicly available information and social media analysis. His recent posts about expensive dinners, weekend trips to the Hamptons, and designer shopping sprees paint a picture of someone living significantly beyond their means, even with his Goldman salary. Jesus, Maya, he says as he enters my trading floor, his voice a mixture of amazement and disgust. "You've turned this place into mission control. How many monitors do you actually need?" I don't look up from my screens, where I'm currently monitoring a complex yield farming strategy across multiple protocols. "As many as it takes to stay ahead of the market," I reply, watching another $23,000 profit notification appear in my periphery. Tyler moves around my setup like he's touring a museum exhibit, occasionally pointing at hardware he doesn't understand. "This is exactly what I'm talking about. You've isolated yourself down here, staring at charts all day. It's not healthy, and it's definitely not sustainable." If only he knew that my unsustainable hobby has generated returns that would make his investment banking division weep with envy. My automated systems have been running continuously for months, capturing profits from market movements while I sleep, eat, or do literally anything else. The passive income from my DeFi positions alone exceeds his monthly salary, and that's before considering the active trading profits. "Emma's been asking about you," he continues, rifling through boxes to find his directory. "She thinks you need to get out more, maybe find a real job. Goldman's actually hiring in their technology division." I could put in a word. I finally turned to look at him, studying the man who once shared my bed and my dreams, now standing in my basement offering me entry-level employment at his company. The irony is so thick I could trade it as a commodity. "That's very thoughtful of both of you," I say, my voice carefully neutral, "but I'm quite content with my current arrangements." Tyler finds his directory and tucks it under his arm, his eyes scanning my trading screens with the dismissive look of someone who thinks he understands something he's never bothered to learn. "Look, I know we didn't end on the best terms, but I still care about you. This crypto thing, it's not going to last forever. The regulators are going to shut it down, the bubble's going to burst, and you're going to be left with nothing." My main screen shows my portfolio balance in the top right corner. $312, $847, $293. 67. The number updates in real time as my positions fluctuate with market movements. Tyler's eyes pass over it without recognition, the digits meaningless to someone who doesn't understand what they're looking at. "I appreciate your concern," I say, watching another automated trade execute flawlessly. "Really, I do. But I think I'll stick with my current path." After Tyler leaves, I pull up the comprehensive analysis I've been building about his financial situation. Public records show he's leveraged to the hilt, with a mortgage payment that consumes nearly 40% of his gross income. His social media spending patterns indicate credit card usage that would be unsustainable without significant bonuses that depend on his performance in an increasingly competitive market. Meanwhile, my crypto portfolio has grown from the $50,000 inheritance I started with 2 years ago to a 9-figure fortune that most traditional investors couldn't comprehend. Every time Tyler mocked my fake internet money, I was building positions in protocols that would reshape the entire financial system. While he was schmoozing clients and playing office politics, I was coding arbitrage bots and analyzing blockchain data to find opportunities that...
Preparing and narrating this story took us a lot of time. So if you are enjoying it, subscribe to our channel. It means a lot to us. Now, back to the story.
Institutional investors hadn't discovered yet. The beauty of my situation isn't just the money, though the $300 million certainly helps. It's the complete inversion of everything Tyler thought he knew about success, value, and intelligence. He built his identity around being the smart one, the successful one, the one with the real job and the real income. Meanwhile, I was quietly building something that would make his Wall Street achievements look like monopoly money. My secure satellite phone rings, the one I use for high-value transactions that require additional privacy layers. The caller ID shows Singapore Financial District, which means Chen is calling from his office at the fund. "Maya, we need to discuss the governance token airdrop opportunity." Chen's voice is excited despite the early morning hour in his time zone. "The protocol you identified is launching next week, and your analysis of their tokenomics was absolutely brilliant. We're looking at potential returns that could exceed 2,000% for early participants." I lean back in my custom-built trading chair, surrounded by millions of dollars worth of cryptocurrency positions that continue generating profits while I have a casual conversation. "Send me the technical documentation," I reply. "I'll review the smart contracts tonight and run some simulations." This is the world Tyler will never understand, where technical expertise and strategic thinking can generate more wealth in a few months than traditional finance creates in decades. While he's following century-old investment strategies and competing with thousands of other bankers for scraps of profit, I'm participating in the creation of entirely new financial systems. The encrypted messaging app shows another notification from my network of crypto researchers, traders, and developers spread across 12 time zones. This decentralized community of brilliant minds shares alpha, discusses cutting-edge protocols, and identifies opportunities that traditional institutions won't discover for years. We're not just trading digital assets. We're actively participating in the construction of tomorrow's financial infrastructure. My phone buzzes with a text from my sister Jessica, who lives in Seattle and works as a software engineer at Amazon. Saw Tyler's latest post about his promotion. You dodging a bullet there or what? She writes, attaching a screenshot of his Instagram story celebrating his new vice president title. I respond with a simple laughing emoji, not bothering to explain that Tyler's entire annual compensation package wouldn't cover the trading fees I pay in a typical month. Jessica knows about my crypto success, but even she doesn't grasp the full scope of what I've built. The psychological challenge of sudden wealth isn't the money itself. It's the isolation that comes from inhabiting a reality that most people can't comprehend. The market never sleeps, and neither do the opportunities it presents to those prepared to capture them. While Tyler is upstairs in his glass tower, attending meetings and writing reports about market conditions, I'm down here in my basement, actively creating those conditions through algorithmic trading strategies that can move markets in real time. My main trading algorithm sends a notification that it's identified a significant arbitrage opportunity between the Chicago Mercantile Exchange's Bitcoin futures and the spot prices on 3 different cryptocurrency exchanges. The profit potential is $1. $2 million if executed within the next 4 minutes. I authorize the trade sequence and watch as my systems coordinate the complex transaction across multiple platforms simultaneously. This is the future Tyler dismissed as a basement hobby. Financial instruments that operate 24/7, trading strategies that adapt to market conditions in milliseconds, and profit opportunities that exist only for those technically sophisticated enough to capture them. While traditional finance sleeps, cryptocurrencies continue generating returns for anyone smart enough to understand the game being played. The afternoon brings another visit, this time Emma, arriving alone in her white Range Rover. I watch through my security cameras as she checks her appearance in the rearview mirror, applying lip gloss and adjusting her hair before approaching my front door. Her outfit screams expensive designer brands, the kind of conspicuous consumption that Tyler loves to finance. Maya, hi! Emma's voice carries artificial warmth as I answer the door. Tyler told me he stopped by earlier. I was in the neighborhood and thought I'd check on you. I invite her in, curious about what prompted this unexpected social call. Emma has never shown interest in maintaining a relationship with Tyler's ex-girlfriend, and her timing feels oddly coincidental. Your house is lovely, she says, glancing around my living room with the calculating gaze of someone mentally appraising real estate values. Tyler mentioned you work from home now. How's that going for you? It has its advantages, I reply, offering her coffee while my trading systems continue generating profits in the basement below us. Flexible hours, no commute, complete control over my environment. Emma settles onto my couch, crossing her legs in a gesture that's probably meant to appear casual but comes across as rehearsed. I admire women who can make that work. It takes real discipline to stay motivated without external structure. Tyler's always impressed by entrepreneurial types. The irony of receiving motivation advice from someone whose primary occupation appears to be spending Tyler's money isn't lost on me. Through social media analysis, I've tracked Emma's spending patterns: luxury handbags, expensive restaurants, weekend trips to resort destinations, all funded by Tyler's Goldman Sachs salary and increasingly frequent credit card usage. What kind of work are you doing from home? Emma asks, her tone suggesting genuine curiosity mixed with the kind of polite condescension that wealthy people use when discussing hobbies with the less fortunate. I trade cryptocurrencies, I answer simply, watching her reaction carefully. Digital assets, blockchain protocols, that sort of thing. Emma's smile becomes more forced, the expression of someone trying to be supportive while internally dismissing what she's hearing. Oh, that's interesting. Like Bitcoin and those other things? Tyler's mentioned how volatile that market is. Seems quite risky. All investing involves risk, I reply, thinking about the $847,000 profit I generated this morning while she was probably choosing an outfit. The key is understanding the technology and market dynamics well enough to manage that risk effectively. She nods enthusiastically, the way people do when they want to appear engaged with a topic they consider beneath their notice. Tyler's always saying how important it is to stick with traditional investments. Real estate, blue-chip stocks, things with actual value. My phone buzzes with a notification from my DeFi dashboard showing another $156,000 in yield farming rewards being distributed to my staked positions. Traditional investors like Tyler and Emma can't comprehend a world where money itself can be programmed to work autonomously, generating returns without human intervention or institutional oversight. Traditional assets certainly have their place, I agree, watching Emma's eyes glaze over as she loses interest in our financial discussion. But emerging technologies often create opportunities that traditional frameworks can't capture. Emma stands and walks to my bookshelf, examining titles that range from computer science textbooks to advanced mathematics, blockchain protocols to cryptographic theory. The books Tyler used to tease me about, calling them nerd literature, and suggesting I read something more accessible. You're certainly dedicated to learning about your field, Emma observes, pulling out a copy of Mastering Bitcoin that's filled with my handwritten notes and highlighted passages. Tyler always says education is the key to success. If Tyler truly believed that, he might have bothered to understand the technology that's reshaping the global financial system, instead of dismissing it as internet money. While he was networking at industry conferences and playing golf with clients, I was studying cryptographic proofs and analyzing protocol economics to identify investment opportunities years before they reached mainstream awareness. Would you like to see my office setup? I ask, curious whether Emma will venture into the basement that Tyler finds so distasteful. Her eyes light up with what appears to be genuine interest. I'd love to. Tyler mentioned you have quite the computer setup down there. We descend to my trading floor, Emma's heels clicking against the wooden stairs as she surveys my domain. The multiple monitors, advanced hardware, and sophisticated cooling systems create an environment that looks more like a hedge fund's quantitative trading desk than a home office. Wow. Emma breathes, her voice carrying a note of actual impressed rather than polite interest. This is incredible. It's like something from a movie. I gesture to the various components of my setup. The main trading screens showing real-time market data from dozens of exchanges, the secondary monitors running backtesting software and algorithmic strategies, the hardware wallets containing my cryptocurrency holdings, and the advanced networking equipment that provides redundant internet connections for maximum uptime. Each screen serves a specific purpose, I explain, watching Emma's eyes widen as she processes the complexity of my operation. Market analysis, automated trading, portfolio management, risk monitoring. The systems run continuously, identifying and executing profitable opportunities even when I'm not actively watching. Emma approaches my main trading desk, her gaze fixed on the portfolio balance displayed in the corner of my primary monitor. For the first time since arriving, she's completely focused, her casual dismissiveness replaced by concentrated attention. Maya, she says slowly, her voice uncertain. That number on your screen, is that my current portfolio value? I confirm, watching the realization dawn across her features. Updated in real time as positions change with market movements. Emma stares at the screen for a long moment, her mind clearly struggling to process what she's seeing. The number represents more wealth than most people accumulate in multiple lifetimes, generated through the quote, basement hobby that Tyler has spent months mocking. $300 million? Emma's voice is barely above a whisper. From trading cryptocurrencies? From understanding technology that most people dismiss as fake internet money, I correct gently. From spending years learning about blockchain protocols, cryptographic systems, and decentralized finance, while other people were focused on traditional status symbols. The silence stretches between us as Emma continues staring at my screens, her worldview evidently experiencing some significant adjustments. The woman who arrived to check on Tyler's poor ex-girlfriend is now standing in a basement that contains more wealth than Goldman Sachs manages for most of their private clients. Does Tyler know? She asks finally, her voice carrying implications that extend far beyond the simple question. Tyler sees what he chooses to see. I reply, watching another automated trade execute in the background. He's never bothered to actually understand what I do down here. It's easier to dismiss something than to admit you might have been wrong about its value. Emma's phone buzzes with what I assume is a message from Tyler, probably wondering about her extended absence. She glances at the notification, then looks back at my screens, where millions of dollars in cryptocurrency continue appreciating in value while we talk. I should probably go, she says, though her feet don't move toward the stairs. Tyler's expecting me for dinner. Of course, I reply, beginning the process of securing my workstation for the evening. Please give him my regards. As Emma climbs the stairs ahead of me, I can practically see the mental calculations happening behind her eyes. Tyler's Goldman Sachs salary, impressive by most standards, suddenly looks quite different when compared to cryptocurrency holdings that could fund small countries. The expensive lifestyle she's grown accustomed to, built on credit cards and mortgage payments, pales beside the kind of wealth that makes traditional luxury seem quaint. At the front door, Emma pauses with her hand on the handle. Maya, can I ask you something personal? Of course. When Tyler talks about your crypto trading, he makes it sound like gambling or playing video games. But what I saw down there, that's not gambling, is it? I consider my response carefully, watching Tyler's girlfriend grapple with information that fundamentally challenges everything her boyfriend has told her about technology, investing, and the nature of value itself. Gambling implies random chance, I explain. What you saw is the result of years spent developing technical expertise, building systematic approaches to market analysis, and creating automated strategies that can execute faster and more accurately than human emotion allows. Tyler calls it gambling, because admitting it requires skill would mean acknowledging that he might have been wrong about something important. Emma nods slowly, processing this perspective against months of listening to Tyler's confident dismissals of cryptocurrency as worthless speculation. The money you have, she continues, it's real, right? Like, you could actually spend it? I pull up my banking app on my phone, showing her the multiple seven-figure balances across various accounts where I park cash from crypto profits. I buy groceries with it, pay my mortgage, fund investment accounts. Last month, I donated $500,000 to scholarship programs for computer science students. Money is money, regardless of whether it started as cryptocurrency or traditional assets. Emma's worldview continues its violent readjustment as she realizes that the basement dweller Tyler has been mocking possesses more liquid wealth than most Fortune 500 executives. The woman he dismissed as delusional now represents the kind of financial independence that his Wall Street career will never achieve. Thank you for showing me, Emma says finally, her voice thoughtful in a way it hasn't been since she arrived. For helping me understand what you actually do. After she leaves, I return to my basement office to monitor the markets that never close. Asian trading sessions are beginning, European markets will open in a few hours, and opportunities continue emerging across global cryptocurrency exchanges. While Tyler sleeps, my automated systems will continue generating profits from market inefficiencies that traditional finance can't even perceive. The encrypted messaging app shows multiple conversations with my network of cryptocurrency researchers, each sharing alpha about emerging protocols, regulatory developments, and technological breakthroughs that will reshape digital asset markets. This decentralized intelligence network provides insights that no traditional financial institution can match, because they're still trying to understand blockchain technology while we're already building its successor systems. Chen messages from Singapore with an update on the governance token opportunity we discussed earlier. Maya, the protocol documentation is even better than expected. Their tokenomics create long-term incentive alignment that should drive significant value accrual. I'm recommending a maximum position size for our early access allocation. I review the technical specifications Chen has shared, analyzing smart contract logic and economic mechanisms with the same rigor that Tyler applies to traditional securities analysis. The difference is that my analysis happens in real time, across global markets that operate continuously. while Tyler's research focuses on companies that report quarterly earnings and trade during limited business hours. The beauty of cryptocurrency markets isn't just their 24/7 nature or their technological sophistication, though both matter enormously. It's the way they reward actual understanding over institutional credentials, technical skill over social connections, and innovative thinking over adherence to outdated frameworks. Tyler succeeds at Goldman Sachs because he's good at playing within existing rules, but cryptocurrency markets favor those who understand the rules being rewritten. My phone displays another notification from my yield farming positions, showing $67,000 in rewards distributed from a liquidity pool I joined 3 weeks ago. The annual percentage yield on this particular strategy exceeds 400%, generated by providing liquidity to a decentralized exchange protocol that facilitates trading between different blockchain networks. Traditional investors like Tyler struggle to comprehend returns this substantial, because they assume high yields must involve high risk. But cryptocurrency markets create opportunities where technical understanding can generate outsized returns with manageable downside exposure. The key is recognizing which protocols have sustainable economic models versus those built on unsustainable token emissions. Late evening brings another message from Emma, sent from what appears to be her personal phone rather than the number she used earlier. Maya, I hope you don't mind me reaching out directly. I've been thinking about our conversation, and I have some questions I'd rather not discuss with Tyler present. Would you be willing to talk sometime this week? I stare at the message for several minutes, considering the implications of Tyler's girlfriend seeking private financial advice from his ex. The request suggests that seeing my portfolio balance has prompted Emma to reconsider her assumptions about cryptocurrency, traditional investing, and perhaps Tyler's expertise in both areas. I'd be happy to discuss any questions you have about cryptocurrency or blockchain technology, I reply. Though I should mention that Tyler might not appreciate you seeking investment advice from his basement-dwelling ex-girlfriend. Emma's response arrives quickly. Tyler doesn't need to know about everything I do with my money. The conversation that follows over the next hour reveals that Emma has been quietly building her own investment portfolio, separate from the shared expenses Tyler covers. She's accumulated nearly $80,000 in a traditional brokerage account and has been growing increasingly frustrated with single-digit annual returns from index funds and blue-chip stocks. Tyler insists that steady, predictable growth is the only responsible approach to investing. Emma explains through our encrypted messaging. But watching those numbers barely move while inflation eats away at purchasing power is frustrating. When I saw your portfolio balance today, it made me realize there might be opportunities I haven't considered. I find myself in the unusual position of potentially providing cryptocurrency education to my ex-boyfriend's girlfriend, a situation that would have seemed impossible just hours earlier. But Emma's questions demonstrate genuine intellectual curiosity, rather than get-rich-quick thinking, and her technical background in marketing for software companies gives her a foundation for understanding blockchain concepts. The first thing to understand about cryptocurrency investing, I explain, is that it requires significantly more research and technical knowledge than traditional assets. You can't just buy Bitcoin and hope for the best. Success requires understanding protocol economics, technological developments, regulatory environments, and market dynamics that change rapidly. Emma peppers me with questions about wallet security, exchange selection, DeFi protocols, and risk management strategies. Her inquiries reveal someone who has clearly been thinking about these topics for weeks, despite Tyler's constant dismissals of cryptocurrency as worthless speculation. Tyler would be furious if he knew I was even considering this, Emma admits. He's made his position on cryptocurrency very clear, and he expects me to defer to his financial expertise. Tyler's financial expertise is real within his domain, I acknowledge. Traditional securities, corporate finance, institutional investing. But cryptocurrency represents a fundamentally different paradigm that requires different knowledge and different skills. Success in one area doesn't automatically transfer to the other. Our conversation continues past midnight, covering everything from basic blockchain concepts to advanced DeFi strategies. Emma proves to be a quick learner, grasping complex technical concepts and asking insightful questions about risk management and portfolio allocation. If I were to start with a small position, Emma asks, what would you recommend for someone with my risk tolerance and technical background? The question forces me to consider whether I want to become financially involved with Tyler's girlfriend, even indirectly. Providing cryptocurrency education is one thing, but offering specific investment advice creates potential complications that extend beyond financial considerations. I think you should spend the next few weeks researching on your own, I suggest. Read the technical documentation for major protocols, follow reputable cryptocurrency researchers, and develop your own understanding of the space. Only invest money you can afford to lose completely, and start with small positions that won't impact your financial security. Emma agrees to this approach, recognizing that sustainable success requires building personal expertise rather than simply following someone else's recommendations. We exchange contact information for future discussions, with the understanding that she'll develop her own investment thesis through independent research. As I finally prepare for bed, my trading systems continue monitoring global cryptocurrency markets for opportunities that will emerge while I sleep. The automated strategies I've developed don't require my constant attention, but they do require the sophisticated technical infrastructure I've built in my basement over the past 2 years. Tyler's mockery of my basement hobby has always missed the point entirely. This isn't about physical location or social perception. It's about creating an environment optimized for the kind of rapid-fire decision-making that cryptocurrency markets demand. While Tyler commutes to his glass tower and sits through committee meetings, I'm executing trades that generate more profit in minutes than his entire department produces in months. The psychological challenge of sudden wealth isn't managing the money itself, though that certainly requires careful attention. It's navigating relationships with people who know you before and after the transformation, people who struggle to reconcile your previous circumstances with your current reality. Tyler represents the before version of my life, when I was still building my technical skills and market knowledge while working within traditional career expectations. His inability to recognize my evolution from computer science graduate to sophisticated quantitative trader reflects his fundamental misunderstanding of both technology and financial markets. Emma's unexpected interest in cryptocurrency education suggests that my conversation with her today might have broader implications than either of us initially recognized. If Tyler's girlfriend begins building her own cryptocurrency portfolio based on lessons learned from his ex, the resulting dynamics could become quite interesting to observe. My final check of portfolio balances before bed shows another successful day. $1, $247,000 in realized profits from automated trading strategies, plus $340,000 in unrealized gains from appreciating long-term positions. The numbers have become almost abstract at this scale, but they represent something more important than wealth accumulation. They represent validation of a thesis Tyler rejected, vindication of expertise he dismissed, and proof that technical understanding combined with strategic thinking can generate returns that traditional finance considers impossible. Tomorrow will bring new opportunities, new market inefficiencies to capture, and new ways to demonstrate that the future of finance belongs to those bold enough to build it rather than those comfortable enough to ignore it. Thursday morning arrives with the kind of crisp October air that makes Manhattan feel electric with possibility. I wake at 5:30 a.m., not from an alarm but from years of conditioning my circadian rhythm to match Asian market opening times. While Tyler sleeps soundly in his Upper East Side apartment, probably dreaming about his next Goldman Sachs promotion, I'm already analyzing overnight developments in cryptocurrency markets that never pause for traditional business hours. My morning routine begins with checking the automated trading systems that operated throughout the night. The algorithmic strategies I deployed before bed have captured $340,000 in profits from arbitrage opportunities between Korean and American exchanges, plus another $180,000 from a yield farming position that automatically rebalanced during European trading hours. By the time Tyler's alarm clock rings, I've already generated more income than most people earn in 5 years. The secure messaging app shows 14 notifications from my global network of cryptocurrency researchers and traders. Chen from Singapore shares intelligence about a new DeFi protocol launching next week with revolutionary cross-chain capabilities. Dmitry from Moscow provides analysis of regulatory developments that could impact Eastern European cryptocurrency adoption. Sarah from London forwards early intelligence about institutional investors preparing to enter specific altcoin markets. This decentralized intelligence network represents one of my greatest competitive advantages. While Tyler relies on research reports from Goldman's analysts who are perpetually 6 months behind cryptocurrency developments, I receive real-time insights from technical experts actively building tomorrow's financial infrastructure. We share alpha because we understand that cryptocurrency markets are large enough for multiple winners, unlike traditional finance where success often requires taking market share from competitors. My phone displays a text message from Emma, sent at 6:23 a.m. Maya, I spent the night reading about blockchain consensus mechanisms. Would you be available to discuss proof-of-stake economics sometime today? The message surprises me for several reasons. First, Emma is clearly more serious about cryptocurrency education than I initially expected. Second, she's awake early enough to have read technical documentation before most people start their commute. Third, she's continuing our conversation despite the obvious complications of Tyler's girlfriend seeking investment advice from his ex. I have some time this afternoon if you'd like to continue our discussion, I reply. Though you might want to consider how Tyler would react to discovering your interest in cryptocurrency. Emma's response arrives immediately. Tyler doesn't control my educational choices or my investment decisions. I'm a grown woman with my own money and my own brain. The defiance in her message suggests that my portfolio revelation yesterday has sparked more than just curiosity about cryptocurrency. Emma appears to be questioning Tyler's financial authority in their relationship, possibly for the first time since they began dating. The implications could extend far beyond investment strategy. I dress carefully for the day ahead, choosing a navy blue blazer and tailored slacks that project competence without ostentation. Today marks the beginning of a carefully orchestrated sequence of events that will fundamentally alter Tyler's understanding of success, value, and intelligence. But first, I need to attend the NYU guest lecture I agreed to deliver 3 months ago. The invitation to speak at New York University's Blockchain Technology Seminar came through my MIT alumni network. Professor Martinez, who heads their computer science department, reached out after reading my published research on automated market maker optimization. The lecture topic is Practical Applications of Algorithmic Trading in Decentralized Finance, which sounds academic but represents cutting-edge strategies that generate millions in profits. NYU's campus bustles with the energy of students who understand they're living through a technological revolution. Unlike Tyler's generation of Wall Street professionals, these young people grew up with smartphones and social media, making them naturally comfortable with digital assets and blockchain technology. They represent the future of finance, while Tyler clings to methodologies that will soon seem as antiquated as trading floor hand signals. Professor Martinez greets me in her office, her enthusiasm for blockchain technology infectious, despite her traditional academic background. Maya, thank you so much for agreeing to speak today. Your research on MEV optimization has been incredibly influential in our graduate program. MEV, or maximum extractable value, represents one of the most sophisticated concepts in decentralized finance. It involves capturing profit from reordering, inserting, or censoring transactions within blockchain blocks, requiring deep understanding of both cryptography and game theory. Tyler's traditional finance education never covered anything remotely this complex, because traditional markets don't operate with the same transparency and programmability. I'm excited to share some practical applications with your students, I reply, reviewing my presentation materials one final time. Theoretical knowledge only becomes valuable when applied to real market conditions. The lecture hall fills with approximately 60 graduate students, their faces reflecting the diverse international composition that makes NYU's program so dynamic. These students represent the next generation of quantitative analysts, blockchain developers, and cryptocurrency entrepreneurs. They'll shape financial markets that Tyler's generation struggles to comprehend. Good morning, everyone. I begin my presentation slides displaying complex mathematical formulas alongside real trading data. Today we'll explore how theoretical concepts in decentralized finance translate into practical profit generation through algorithmic trading strategies. The next 90 minutes pass quickly as I guide students through increasingly sophisticated examples of cryptocurrency market mechanics. We discuss liquidity mining optimization, automated arbitrage between different blockchain networks, and governance token value accrual mechanisms. Several students ask questions that demonstrate PhD-level understanding of topics that most traditional investors have never encountered. Professor Chen, could you explain how your arbitrage algorithms account for transaction confirmation times across different blockchain networks? Asks a student from the back row, using the title Professor Martinez introduced despite my lack of formal academic position. The question touches on one of the most technically challenging aspects of cross-chain cryptocurrency trading. Success requires understanding blockchain consensus mechanisms, network congestion patterns, and transaction fee markets across multiple protocols simultaneously. Network latency creates both opportunities and risks, I explain, pulling up real-time data from my trading systems. My algorithms monitor mempool activity across 12 different blockchains, predicting confirmation times and adjusting position sizes accordingly. The key is building buffer margins that account for worst-case scenarios while maintaining profitability in normal conditions. A student near the front raises her hand. What kind of capital requirements are necessary to implement these strategies effectively? The question forces me to consider how much detail to share about my personal trading operation. These students could theoretically implement similar strategies with sufficient technical knowledge and starting capital. Entry barriers vary significantly depending on strategy complexity. I replied diplomatically. Simple arbitrage might require $10,000 to $50,000 in starting capital, while sophisticated multi-chain operations benefit from seven-figure positions that can absorb transaction costs and slippage. What I don't mention is that my personal trading operation currently manages over $300 million across 47 different cryptocurrency protocols, generating returns that would be impossible with smaller position sizes. The mathematical relationship between capital and profit in cryptocurrency markets is nonlinear, creating substantial advantages for sophisticated operators with deep pockets. After the lecture, Professor Martinez walks with me across campus, her conversation revealing deep appreciation for the practical applications I've demonstrated. Maya, your work represents exactly the kind of real-world expertise our program needs more of. Would you consider joining our advisory board? The invitation represents academic recognition that Tyler would struggle to understand. His Wall Street success depends on playing within established hierarchies, while blockchain technology creates entirely new frameworks for generating value and demonstrating expertise. I'd be honored to contribute to your program, I accept, thinking about how Tyler would react to learning that his basement-dwelling ex-girlfriend has been invited to guide NYU's blockchain curriculum development. My phone buzzes with a message from Emma as I walk back toward my car. Tyler just left for a client dinner. Would this be a good time to continue our conversation about cryptocurrency investing? The timing seems perfect for the next phase of my carefully orchestrated plan. Emma's growing interest in cryptocurrency represents an opportunity to demonstrate Tyler's limitations in a way that he'll be forced to confront directly. Meet me at the Blue Bottle Coffee on Greenwich Street in 30 minutes, I reply. We can discuss investment strategies in more detail. The coffee shop occupies a converted warehouse space in Tribeca, its industrial aesthetic appealing to the kind of tech-forward crowd that understands cryptocurrency culture. I arrive 15 minutes early and claim a corner table that provides privacy for our conversation while offering clear sightlines to monitor our surroundings. Emma enters precisely on time, her appearance suggesting she's taken our meeting seriously. Instead of the designer casual wear she typically favors, she's dressed in business attire and carries a leather portfolio that probably contains notes from her cryptocurrency research. Maya, thank you for making time for this, Emma says, settling into the chair across from me. I've been reading about DeFi protocols since our conversation yesterday, and I have so many questions I don't know where to start. Her enthusiasm surprises me with its genuineness. Emma's questions over the next hour demonstrate that she's spent significant time studying technical documentation, analyzing protocol tokenomics, and researching market dynamics. Her background in software marketing provides useful context for understanding how blockchain technologies create value. The concept of yield farming is fascinating, Emma continues, consulting handwritten notes that fill several pages. But I'm struggling to understand how protocols can sustainably offer annual percentage yields that exceed traditional investment returns by such massive margins. The question reveals sophisticated thinking about sustainable economics versus unsustainable token emissions. Many people attracted to DeFi focus only on headline yields without analyzing the underlying mechanisms that generate those returns. You're asking exactly the right questions, I tell her, pulling out my phone to show real examples from my portfolio. Sustainable yield comes from actual economic activity, protocol fees, and value creation. Unsustainable yield comes from token emissions that will eventually decrease or disappear entirely. I walk Emma through several specific examples from my DeFi positions, explaining how automated market makers generate fees from trading volume, how lending protocols profit from interest rate spreads, and how governance tokens accrue value from protocol success. Her questions become increasingly sophisticated as our conversation progresses. Tyler thinks all of this is basically gambling, Emma admits, her voice carrying a note of frustration. He insists that anything generating returns this high must involve risks that most people don't understand. Tyler's not entirely wrong about risks. I acknowledge. Cryptocurrency markets can be extremely volatile, smart contracts can have bugs, protocols can be exploited by hackers, and regulatory changes can impact entire sectors overnight. But his mistake is assuming that high returns automatically mean high risk without analyzing the underlying mechanisms. Emma nods thoughtfully, making additional notes in her portfolio. So the key is understanding technology well enough to evaluate which opportunities have sustainable economics versus those built on speculation. Exactly. And that requires technical education that most traditional investors never acquire, because they're not necessary for understanding stocks and bonds. Our conversation shifts toward practical considerations as Emma reveals she's prepared to allocate $25,000 toward cryptocurrency investments, starting with small positions in established protocols while she builds expertise in the space. I've been keeping this money in savings accounts earning practically nothing, Emma explains. Tyler insists that capital preservation is more important than growth, but watching purchasing power erode due to inflation is incredibly frustrating. The amount represents roughly 30% of Emma's personal savings, accumulated through her marketing career independent of Tyler's financial support. Her willingness to invest such a significant portion demonstrates serious commitment to cryptocurrency education rather than casual speculation. Before you invest anything, I caution. Make sure you understand wallet security, exchange selection, and risk management strategies. Cryptocurrency markets punish careless mistakes in ways that traditional investments don't. Emma produces another set of notes covering hardware wallets, multi-signature security, exchange reputation analysis, and position sizing strategies. Her preparation has been remarkably thorough for someone who discovered my portfolio balance just 24 hours ago. Would you be willing to review my investment plan before I execute any trades? Emma asks. I know this creates awkward dynamics with Tyler, but you're the most knowledgeable person I know in this space. The request forces me to consider whether I want deeper involvement in Emma and Tyler's relationship dynamics. Providing investment advice to Tyler's girlfriend could accelerate confrontation in ways that might not align with my strategic timeline. I'm happy to review your research and provide educational feedback. I agree carefully. But ultimately, you need to make your own investment decisions based on your own analysis and risk tolerance. Emma's phone rings with Tyler's contact photo, a candid shot from their recent vacation to Nantucket. She glances at the screen, then declines the call, her attention remaining focused on our cryptocurrency discussion. He's probably wondering about my evening plans, Emma explains. I told him I was meeting a friend from work to discuss marketing strategies. The lie surprises me with its casualness, suggesting that Emma regularly conceals activities from Tyler when they conflict with his preferences or expectations. Their relationship dynamic appears more complex than his social media posts suggest. Emma, you should consider the implications of keeping significant financial decisions from Tyler. I advise. Cryptocurrency investing requires ongoing attention and education, which will be difficult to hide if your relationship is serious. She sets down her coffee cup, her expression serious. Maya, can I ask you something personal about your relationship with Tyler? I nod, curious about her perspective on their shared romantic history. Did he always dismiss your interests this way? The condescending attitude about your work? The assumption that his opinion should override your expertise? The question touches on fundamental issues that ultimately ended my relationship with Tyler, though I've never articulated them so directly. Tyler has strong opinions about how success should look, I reply carefully. Traditional career paths, conventional investment strategies, established social hierarchies. He struggles with anything that challenges those frameworks, especially when it comes from someone he doesn't expect to possess specialized knowledge. Emma absorbs this information while scrolling through Tyler's recent Instagram posts on her phone. The images show expensive restaurants, luxury hotels, and designer purchases that suggest a lifestyle requiring significant credit card usage to supplement his Goldman Sachs salary. He's been talking about buying a house in the Hamptons, Emma continues. Something about building generational wealth through real estate investment. But when I asked to see his financial projections, he said I wouldn't understand the analysis. The Hamptons real estate plan represents exactly the kind of traditional wealth-building strategy that Tyler considers sophisticated. Despite requiring massive leverage and generating relatively modest returns compared to well-executed cryptocurrency positions, real estate can certainly build wealth over time, I acknowledge. But his dismissal of your ability to understand financial analysis seems problematic, especially given your educational background and professional experience. Emma's marketing career requires statistical analysis, consumer behavior modeling, and ROI optimization across complex digital campaigns. Her intellectual capabilities are clearly sufficient for evaluating investment opportunities, regardless of asset class. I've been thinking about our conversation yesterday, Emma admits, about Tyler's assumptions regarding intelligence, expertise, and who deserves to be taken seriously. Seeing your trading operation made me realize how much he's been underestimating both of us. The insight represents a significant evolution in Emma's perception of Tyler's character, potentially extending far beyond financial decision-making into fundamental relationship dynamics. My secure phone buzzes with an encrypted message from Chen in Singapore. Maya, the governance token opportunity we discussed is accelerating. Protocol launches tomorrow with initial DEX offering. Are you prepared for maximum allocation? The message reminds me that cryptocurrency markets continue operating regardless of personal drama, creating opportunities that require immediate attention and sophisticated technical execution. Emma, I need to handle some time-sensitive trading business, I explain, checking market conditions on my phone. But I'd like to continue our conversation about investment strategies and relationship dynamics. She nods understandingly, gathering her notes and portfolio materials. Maya, thank you for taking my questions seriously and treating me like someone capable of understanding complex topics. Tyler could learn something from your approach. After Emma leaves, I spend the next 2 hours executing a complex multi-stage trade sequence across 6 different blockchain networks. The governance token opportunity that Chen identified requires precise timing and substantial capital allocation, but the potential returns justify the operational complexity. By 10 p.m., I've secured positions worth $15 million in the new protocol's governance tokens, purchased through a combination of direct DEX trading and participation in their initial distribution mechanism. Early analysis suggests the protocol's tokenomics could drive significant value appreciation as adoption grows over the next several months. My phone shows a message from Tyler, sent an hour ago. Maya, Emma mentioned you two have been talking. Hope you're not filling her head with cryptocurrency nonsense. She's too smart to fall for get-rich-quick schemes. The irony of Tyler calling Emma too smart for cryptocurrency while simultaneously dismissing her ability to understand his real estate analysis isn't lost on me. His message reveals the exact kind of patronizing attitude that Emma has apparently begun questioning. Emma asked intelligent questions about blockchain technology and DeFi protocols. I replied. I provided educational information and encouraged her to do thorough research before making any investment decisions. Tyler's response arrives immediately. She doesn't need education about imaginary internet money. She needs to focus on real wealth-building strategies like property investment and retirement planning. Perhaps you should discuss investment philosophy with Emma directly rather than through intermediaries, I suggest. She seems quite capable of forming her own opinions about financial opportunities. The conversation dies there, but I suspect it represents only the beginning of larger discussions about expertise, authority, and decision-making autonomy in Tyler and Emma's relationship. Late that evening, I receive another message from Emma. Maya, I've completed the hardware wallet setup and security protocols you recommended. Would you be willing to review my initial cryptocurrency allocation before I execute the trades? Her message includes detailed spreadsheets showing proposed position sizes across 8 different cryptocurrency protocols, risk assessment matrices, and exit strategy planning. The analysis demonstrates sophisticated understanding of portfolio theory applied to digital assets. Your research is impressively thorough, I reply after reviewing her materials. Start with smaller position sizes than you've outlined, and plan to increase allocations gradually as you gain experience with each protocol. Emma's preparation contrasts sharply with Tyler's approach to financial decision-making, which typically involves confident pronouncements based on conventional wisdom rather than detailed technical analysis. Her willingness to acknowledge knowledge gaps and seek expert guidance suggests intellectual humility that Tyler rarely demonstrates. The weekend arrives with Emma executing her first cryptocurrency trades, purchasing positions in Ethereum, Chainlink, and Aave, based on fundamental analysis she's conducted independently. Her entry points are well-timed, suggesting she's absorbed lessons about market dynamics and technical analysis from our educational discussions. Tyler's social media posts from the weekend show expensive dinners and luxury shopping, lifestyle choices that seem increasingly disconnected from responsible financial planning. His Instagram story features a $3,000 bottle of wine at dinner, tagged with "celebrating success" and "living the dream." Meanwhile, Emma's small cryptocurrency positions appreciate by 12% over the weekend, generating more profit in 2 days than her savings account earned in the previous year. She messages me screenshots of her portfolio performance, her excitement evident despite the relatively modest dollar amounts involved. Maya, this is incredible! I know it's just beginner's luck, but seeing real profits from understanding technology feels amazing. Understanding leads to confidence, which enables patience during volatile periods. I reply. Focus on continuing your education rather than short-term price movements. Emma's enthusiasm for cryptocurrency learning accelerates throughout the weekend. She joins online communities, starts following blockchain researchers on Twitter, and begins reading technical documentation for additional protocols she's considering for investment. Tyler, apparently unaware of Emma's cryptocurrency activities, continues posting about traditional investment strategies and mocking digital asset speculation in his social media updates. His blindness to Emma's evolving interests seems characteristic of his broader tendency to assume rather than investigate. Monday morning brings a significant development in global cryptocurrency markets, as institutional investors announce major allocation decisions that could drive substantial appreciation across multiple protocols. My automated trading systems capture early profits from the resulting volatility, generating $1 million in realized gains before traditional markets open for business. Emma messages me during her commute to work. Maya, I'm seeing major price movements in my portfolio this morning. Should I consider taking profits or maintaining long-term positions? Her question demonstrates growing sophistication about investment decision-making, though she's still seeking validation for strategies she's capable of evaluating independently. Review your original investment thesis for each position, I advise. If fundamental factors remain strong, short-term volatility shouldn't drive portfolio changes. If your analysis was wrong, exit and learn from the experience. The advice represents a core principle of successful cryptocurrency investing. Base decisions on research and analysis rather than emotional responses to price movements. Tyler's traditional finance background never required this kind of psychological discipline, because stock markets are less volatile and operate during limited hours. By lunchtime, Emma's portfolio has appreciated by nearly 30% from her weekend purchases, generating more profit in 72 hours than traditional investments typically produce in entire years. Her success, while modest in absolute dollar terms, validates the cryptocurrency education she's been pursuing against Tyler's explicit discouragement. "I understand now why you've been so successful," Emma texts. "This isn't gambling or speculation. It's applied technology analysis combined with disciplined risk management." Her insight represents exactly the kind of learning that Tyler dismisses as impossible for normal people to understand. Emma's rapid progress demonstrates that cryptocurrency success requires education and discipline, rather than special talents or insider access. The afternoon brings an unexpected development as Tyler calls me directly, his voice carrying unusual tension. "Maya, I need to ask you something about Emma. She's been acting strange lately, asking weird questions about investing and technology. Did you say something to her about cryptocurrency?" His question reveals that Emma's intellectual evolution has become noticeable enough to concern him, though he apparently hasn't discovered her actual trading activity yet. Emma asked educational questions about blockchain technology. I confirm. I provided factual information and encouraged thorough research before making any financial decisions. She doesn't need to research cryptocurrency, Tyler responds sharply. She needs to focus on real investment strategies that won't lose all her money when the bubble bursts. Perhaps Emma is capable of evaluating investment opportunities and making her own financial decisions, I suggest. She seems quite intelligent and analytically minded. Tyler's silence suggests he's struggling to articulate his objection to Emma's intellectual independence without sounding controlling or patronizing. "Look, Maya, I know you mean well, but Emma doesn't have our background in finance. She could get hurt trying to understand markets that even professionals struggle with. Emma has a successful marketing career that requires statistical analysis and performance optimization," I point out. "Those skills transfer well to investment analysis, regardless of asset class." The conversation ends abruptly as Tyler apparently realizes he's arguing that his girlfriend lacks the intelligence to understand concepts she's already learning successfully. That evening, Emma calls me from her apartment while Tyler works late at Goldman Sachs, her voice reflecting excitement mixed with concern about relationship implications. "Maya, my cryptocurrency positions are up 43% since I started investing. I know it's been less than a week, but the returns feel almost surreal compared to traditional investments. Cryptocurrency markets can move quickly in both directions. I caution, don't let early success create overconfidence or encourage excessive risk-taking." Emma's discipline impressed me throughout our conversation. Despite substantial, early profits, she's maintaining her original position sizes and continuing to focus on education rather than speculation. Tyler's been asking questions about my recent interest in technology and investing, Emma admits. "I think he suspects I'm considering cryptocurrency, though he hasn't discovered my actual trading activity. How do you plan to handle that conversation when it becomes unavoidable?" I ask. Emma pauses for a long moment. "I think I need to be honest about my investment decisions and my right to make them independently. Our relationship won't work if he expects me to defer to his judgment on everything related to money." The statement represents a significant evolution in Emma's thinking about autonomy, expertise, and relationship dynamics. Tyler's assumption that he should control financial decision-making has apparently become unsustainable. That conversation might be more challenging than you expect, I warn. Tyler has strong opinions about cryptocurrency and about his role as financial expert in your relationship. Then maybe it's time we discussed whether his opinion should override my research and my money, Emma replies, her voice carrying new confidence. Tuesday morning brings news that will accelerate the confrontation Emma anticipates. The Wall Street Journal publishes a front-page article about institutional cryptocurrency adoption, featuring interviews with major investment banks and pension funds that are allocating significant capital to digital assets. Tyler's Goldman Sachs division is mentioned specifically as one of the traditional firms struggling to develop cryptocurrency expertise while their clients demand exposure to blockchain technologies. The article suggests that investment professionals without digital asset knowledge may find their careers limited as markets continue evolving. Emma forwards me the article with a simple message: interesting timing. The piece validates everything I've been telling Emma about cryptocurrency representing the future of finance rather than speculative gambling. Tyler's dismissal of blockchain technology now appears not just wrong, but professionally dangerous for someone in his position. My secure phone shows a message from Chen. Maya, the governance token position you took yesterday is performing exceptionally. Protocol adoption is exceeding projections and token economics are driving sustained value appreciation. This could be our most successful early-stage investment. The update reminds me that while Tyler and Emma navigate relationship conflicts, cryptocurrency markets continue creating life-changing wealth for those positioned to capture it. My governance token position has appreciated by $4.2 million since yesterday, demonstrating the kind of returns that traditional finance considers impossible. Emma's cryptocurrency portfolio, though much smaller, has continued appreciating throughout the week. Her total returns now exceed 60% from positions held for less than 7 days, validating her decision to pursue blockchain education despite Tyler's objections. Maya, Tyler saw the Wall Street Journal article this morning and seemed genuinely shaken. Emma texts during her lunch break. He spent 20 minutes reading about institutional cryptocurrency adoption, then made several phone calls to colleagues about Goldman's digital asset strategy. Tyler's reaction suggests he's beginning to recognize that cryptocurrency dismissal may no longer be professionally viable, regardless of his personal opinions about blockchain technology. How did he respond to your questions about the article? I asked. He insisted that institutional adoption doesn't change the fundamental risks of cryptocurrency speculation, Emma replies. But his confidence seemed forced, like he was trying to convince himself as much as me. The afternoon brings an unexpected development as Tyler requests a meeting, his message uncharacteristically formal and serious. Maya, I'd like to discuss some things in person if you have time. Are you available this evening? His tone suggests that our conversation will extend beyond casual catching up between exes. Tyler has apparently decided that Emma's growing interest in cryptocurrency requires direct intervention. I'm available after 7 p.m., I reply, curious about his strategy for addressing a situation he doesn't fully understand yet. Tyler arrives at my house precisely on time, his appearance reflecting unusual stress, despite his typically immaculate grooming. His designer suit and luxury accessories seem almost costume-like against the backdrop of my suburban neighborhood. Maya, thank you for making time for this conversation. Tyler begins formally as I invite him inside. I wanted to discuss Emma's recent interest in cryptocurrency and technology investing. We settle in my living room, the same space where Emma first learned about my portfolio balance less than a week ago. Tyler's body language suggests he's preparing for a difficult conversation about topics he'd prefer to avoid. Emma mentioned you've been providing educational information about blockchain protocols and digital assets. Tyler continues. I appreciate that your intentions are probably good, but I'm concerned about the influence you're having on her investment thinking. His phrasing reveals the fundamental issue. Tyler expects to control Emma's financial education and investment decisions, treating her intellectual independence as external influence rather than personal growth. Emma asked intelligent questions about technology and markets. I reply carefully. I provided factual information and encouraged thorough research before making any financial commitments. Tyler shifts uncomfortably in his chair, apparently struggling to articulate his objections without admitting that he wants to limit Emma's access to information and education. Look, Maya, I know you've been successful with your cryptocurrency trading, but Emma doesn't have your technical background. She could get hurt trying to navigate markets that even experienced investors find challenging. Emma has a successful career in marketing that requires analytical thinking and performance optimization, I point out. Those skills are highly relevant to investment analysis and risk management. Tyler's expression suggests he's realizing that his argument depends on claiming Emma lacks intelligence she obviously possesses, a position that becomes increasingly untenable as our conversation continues. It's not about intelligence, Tyler backpedals. It's about experience and specialized knowledge. Cryptocurrency markets are different from anything she's encountered professionally, which is why education and gradual position building makes sense for anyone new to digital assets. I agree. Emma's approach has been quite conservative and research-focused. Tyler's silence suggests he's beginning to understand that Emma's cryptocurrency interest represents intellectual curiosity rather than reckless speculation, making his protective concerns seem patronizing rather than reasonable. Maya, can I ask you something directly? Tyler's tone becomes more personal. Are you encouraging Emma's interest in cryptocurrency because of our history? Some kind of attempt to create problems in my relationship? The question reveals Tyler's fundamental inability to imagine that Emma might pursue financial education for her own reasons, rather than as part of some elaborate scheme involving his ex-girlfriend. Tyler, Emma is an intelligent adult capable of making her own decisions about education and investing, I reply. Her interest in blockchain technology reflects her intellectual curiosity, not external manipulation. Tyler stands and moves to my bookshelf, examining the same technical volumes that Emma studied during her visit. His expression suggests he's beginning to recognize the depth of knowledge required for successful cryptocurrency investing. How much money are you actually making from this stuff? Tyler asks suddenly, his voice carrying genuine curiosity mixed with skepticism. The question creates an opportunity to demonstrate the reality of cryptocurrency success versus Tyler's dismissive assumptions, but revealing specific numbers could escalate our conversation in unpredictable directions. Enough to maintain this lifestyle without traditional employment, I replied diplomatically, gesturing around my well-appointed home. Tyler processes this information while continuing to browse my technical library, his financial expertise allowing him to recognize that maintaining my apparent standard of living requires substantial passive income. And Emma knows about your success? Tyler asks, his voice carrying implications about information sharing and relationship dynamics. Emma has seen evidence that cryptocurrency investing can be profitable when approached with proper education and risk management. I confirm. Tyler absorbs this revelation while calculating the implications for his relationship and his authority as Emma's financial advisor. His comfortable assumptions about expertise and success are being challenged in ways that threaten his established identity. Maya, I need to ask you not to encourage Emma's cryptocurrency interest any further, Tyler says finally, his voice carrying the authoritative tone he probably uses with junior Goldman analysts. She's not ready for these markets, and I don't want her getting hurt financially. The request reveals Tyler's expectation that he should control Emma's access to financial education and investment opportunities, treating her autonomy as negotiable rather than fundamental. Tyler, Emma is capable of making her own decisions about education and investing, I reply. I'm not going to discourage intellectual curiosity or independent research. Tyler's expression suggests he's realizing that his request exceeds reasonable boundaries, while simultaneously feeling threatened by Emma's growing financial independence. Our conversation continues for another hour as Tyler struggles to articulate legitimate concerns about Emma's cryptocurrency interest, without admitting that he wants to control her investment decisions. His arguments become increasingly circular as he realizes that Emma's research-based approach addresses most traditional objections to digital asset investing. Just promise me you'll be careful about the advice you give her, Tyler says as he prepares to leave. Emma trusts your opinion, and I don't want her making decisions she'll regret. I encourage Emma to do her own research and make her own decisions based on her own analysis and risk tolerance, I reply. That's the safest approach for any investor in any market. After Tyler leaves, I consider the implications of our conversation for the broader dynamics between him and Emma. His inability to present coherent arguments against Emma's cryptocurrency education suggests that their conflict reflects deeper issues about autonomy and respect, rather than investment strategy. Emma calls an hour later, her voice reflecting a mixture of amusement and frustration. Tyler just spent 30 minutes explaining why I shouldn't trust your investment advice, Emma reports. But when I asked specific questions about his objections to blockchain technology, he couldn't provide technical answers. How did that conversation end? I ask. With Tyler insisting that I defer to his financial expertise and me explaining that I'm capable of researching investment opportunities independently, Emma replies. I don't think he expected me to push back so directly. The development suggests that Emma's cryptocurrency education has strengthened her confidence in ways that extend beyond investment analysis into fundamental relationship dynamics about decision-making and intellectual respect. Wednesday morning brings news that will force Tyler to confront the changing landscape of professional finance whether he's prepared or not. Goldman Sachs announces a new digital assets division with plans to hire 50 cryptocurrency specialists over the next 6 months. The job postings require exactly the kind of technical knowledge that Tyler has been dismissing as worthless: blockchain protocol analysis, smart contract auditing, DeFi yield optimization, and quantitative trading. Strategy development. His traditional securities expertise, while valuable, no longer positions him for the most lucrative opportunities in modern finance. Emma forwards me the Goldman announcement with a message that captures the irony perfectly. Looks like Tyler's employer disagrees with his assessment of cryptocurrency career prospects. The news represents a pivotal moment in Tyler's professional development. He can continue dismissing blockchain technology and find himself increasingly marginalized within his own company. Or he can acknowledge his knowledge gaps and begin the educational process he's been discouraging Emma from pursuing. My encrypted phone shows another update from Chen about our governance token position. Maya, token appreciation has exceeded our most optimistic projections. Your $15 million position is now worth $31 million. Protocol adoption is accelerating beyond all expectations. The update reminds me that while Tyler grapples with changing professional requirements, cryptocurrency markets continue rewarding those who understood blockchain technology's potential years before institutional recognition arrived. Emma's smaller positions have also benefited from the broader institutional adoption wave, with her portfolio now showing total returns exceeding 90% from investments made less than 2 weeks ago. Her success validates the educational approach she's taken despite Tyler's objections and concerns. Maya, I need to tell Tyler about my cryptocurrency investments. Emma texts during her morning commute. This conversation can't be postponed any longer, especially given Goldman's announcement about their digital assets division. The decision suggests that Emma has reached a tipping point where maintaining secrecy about her investment activities has become more problematic than confronting Tyler's objections directly. Are you prepared for Tyler to react poorly to your investment success? I ask. His professional identity depends partly on being the financial expert in your relationship. I've been thinking about that, Emma replies. If Tyler can't handle me being successful at something he considers impossible, then we have bigger problems than investment philosophy. The insight represents a significant maturation in Emma's understanding of relationship dynamics and intellectual equality. Tyler's reaction to her cryptocurrency success will reveal whether he's capable of respecting her expertise and celebrating her achievements. Thursday evening brings the confrontation Emma has been anticipating. Tyler arrives at her apartment after work, his mood apparently influenced by another day of colleagues discussing Goldman's digital assets initiative and the technical knowledge gaps it has revealed throughout their traditional investment divisions. Emma calls me afterward to describe the conversation, her voice reflecting a mixture of relief and disappointment about Tyler's response to her cryptocurrency portfolio revelation. I showed Tyler my investment returns and explained the research methodology I've been using, Emma reports. His first reaction was anger that I'd hidden my trading activity, followed by insistence that my profits were just beginner's luck. Tyler's response follows exactly the pattern I expected, dismissing Emma's success rather than acknowledging that his assumptions about cryptocurrency might have been wrong. How did you respond to his dismissal? I ask. I walked him through my investment thesis for each position, explained the technical analysis I'd conducted, and showed him the educational resources I've been using. Emma replies. By the end of our conversation, Tyler was asking questions about blockchain technology for the first time since I've known him. The development suggests that Emma's demonstration of actual knowledge and real profits has forced Tyler to confront the gap between his assumptions and reality. What happens next? I ask. Tyler admitted that he might have been wrong about cryptocurrency being pure speculation, Emma continues. He asked if I'd be willing to teach him about blockchain technology and DeFi protocols. 6 months later, Tyler sits in my basement office, frantically taking notes as I explain automated market maker optimization strategies. His Goldman Sachs colleagues now seek his advice on blockchain technology, never suspecting he learned everything from his ex-girlfriend, whom he once called a basement loser. Emma's cryptocurrency portfolio has grown to $2.3 million, making her one of the most successful retail DeFi investors in our network. She speaks at blockchain conferences while Tyler struggles to understand basic smart contract concepts during his remedial cryptocurrency education. The role reversal is complete. Tyler's promotion depends on digital asset expertise he's desperately trying to acquire, while Emma has become financially independent through the technology he dismissed as worthless speculation. Goldman's new digital assets division offered me the head of quantitative strategy position last month. I declined, explaining that my basement operation generates more revenue than their entire traditional trading desk. Tyler's mortgage application was rejected yesterday. His leveraged lifestyle couldn't survive the transition period while learning cryptocurrency fundamentals. Emma offered to help with his down payment, using profits from her DeFi positions. My phone shows another notification. Portfolio balance now exceeds $847 million. The governance tokens Chen recommended have revolutionized cross-chain liquidity, generating returns that traditional finance still can't comprehend. Tyler posted an Instagram story yesterday thanking me for cryptocurrency education that saved his career. The same basement he mocked now represents his pathway to professional survival in finance's digital transformation. Emma moved to a penthouse overlooking Central Park, purchased entirely with cryptocurrency profits. Tyler visits occasionally, still struggling with smart contract auditing while she explains yield optimization to institutional investors. The basement where Tyler once found me playing with computers now hosts strategy sessions for Goldman's blockchain initiative. They pay seven-figure consulting fees for expertise Tyler dismissed as worthless gaming. My automated trading systems generated $12 million yesterday, while I delivered a keynote address at MIT about decentralized finance evolution. Tyler attended, taking careful notes about protocols he once called imaginary money. The financial media calls me the cryptocurrency oracle, who predicted institutional adoption before Wall Street understood blockchain technology existed. Tyler frames their articles in his office, finally proud to mention our connection. Emma's DeFi research fund manages $50 million in assets, making her one of the youngest successful crypto fund managers in history. Tyler asks her opinion on investment decisions, their relationship dynamic permanently transformed. The house Tyler couldn't afford to buy is now my second home in the Hamptons. He rents it from me during summers, paying with profits from cryptocurrency strategies I taught him. Goldman promoted Tyler to head their retail cryptocurrency education program. His job involves teaching clients about digital assets using knowledge he acquired from his basement-dwelling ex-girlfriend. My secure phone buzzes with updates from global cryptocurrency networks, where I'm recognized as a pioneering quantitative strategist. Tyler joins these calls now, introduced as my former student rather than ex-boyfriend. The irony reached its peak when Tyler's mother asked me to manage her retirement portfolio, having heard about my cryptocurrency expertise from society friends. She invested $5 million based on my recommendations. Emma's engagement ring contains diamonds purchased with DeFi profits, though Tyler proposed using traditional savings he'd accumulated through my trading education. Their wedding will be funded by blockchain technology he once mocked. The Wall Street Journal featured my story as an example of how cryptocurrency creates opportunities for technically sophisticated investors willing to challenge conventional financial wisdom. Tyler keeps the article on his desk. My basement office expanded into a full trading floor, occupying 3 floors of a Manhattan building. Tyler works there now, managing institutional cryptocurrency portfolios under my supervision. Emma speaks at Harvard Business School about her transition from marketing professional to cryptocurrency entrepreneur. Tyler attends her lectures, still amazed by her technical expertise development. The Federal Reserve invited me to consult on central bank digital currency design. Tyler drives me to Washington meetings, having become my unofficial chief of staff and cryptocurrency research assistant. My encrypted phone shows messages from global financial leaders seeking advice on blockchain integration strategies. Tyler screens these calls, scheduling meetings between his former girlfriend and world's most powerful bankers. The cryptocurrency education program Tyler helps me run has trained over 10,000 traditional investors in blockchain technology. None know that their instructor once dismissed digital assets as basement hobbies. Emma's book about DeFi investing becomes a bestseller, dedicating a chapter to overcoming skepticism from financial professionals who lack technical knowledge. Tyler writes the foreword, acknowledging his initial misconceptions. My portfolio balance approaches $1.2 billion as institutional adoption validates every prediction Tyler once ridiculed. He manages my traditional asset allocation now, having accepted his role as student rather than teacher. The basement where this story began is now a museum dedicated to cryptocurrency history. Tyler gives tours to Goldman clients, explaining how decentralized finance transformed global economics from this humble suburban location. Goldman's annual report credits their digital assets' success to, quote, innovative strategies developed in collaboration with leading blockchain researchers. Tyler knows they mean the basement dweller he once mocked relentlessly. Emma's cryptocurrency fund attracts pension funds and endowments, seeking exposure to DeFi protocols she learned about during our coffee shop conversations. Tyler assists with institutional investor relations. My MIT Alumni magazine features my story as an example of how technical education combined with entrepreneurial thinking can create transformative wealth. Tyler has multiple copies framed in his apartment. The house Tyler visits to continue his blockchain education is the same basement where he once patronizingly explained traditional finance concepts to his computer-obsessed girlfriend who understood markets better than he ever imagined. Tyler's LinkedIn profile now describes him as a, quote, blockchain education specialist and cryptocurrency strategy consultant. Credentials entirely dependent on knowledge transferred from the woman he dismissed as technically incompetent. Emma's penthouse parties bring together cryptocurrency pioneers, traditional finance executives, and blockchain developers creating tomorrow's financial infrastructure. Tyler networks carefully, his reputation dependent on maintaining these relationships through association with me. The final irony arrived yesterday, when Tyler thanked me publicly during Goldman's annual cryptocurrency conference, acknowledging that his career advancement depended entirely on education provided by his ex-girlfriend's basement hobby. My phone displays the ultimate validation, $1.47 billion portfolio balance built from $50,000 inheritance through understanding technology Tyler couldn't comprehend. The basement loser now controls more wealth than his entire former employer. Up next, you've got two more standout stories right on your screen. If this one hit the mark, you won't want to pass these up. Just click and check them out.